Hi, a very good morning to all of you. My name is Mark, and I'm here to give a commentary on the markets. Yesterday the Dow was down about 100 points. Sorry, not the Dow, the Spiders was down about 100 points. And seems like the market, if you look at the Spiders now, the trend line that I've drawn, all right, which marks the boundaries of the top and bottom of the current situation, it seems that it could be on the high side now, okay? But like I said before, when I draw trend lines on the indexes, I don't really put too much weight on it. It's just something good to see and good to know. When you can draw good trend lines, maybe you can predict a little bit on the indexes, but my advice is try not to predict too much on the indices because indices is it's put by 500 stocks like the S&P 500. So it's an aggregate movement rather than a normal movement of a stock, which the trend line could work slightly better in this case. But you can see that it's actually on the high marks of the trend line, and could pull back I do not know. But we look at the 50-day, which is the black line over here. It seems that the market is still considered to be in a very good uptrend. All right, so we don't guess the market. So update of some of the positions that I talked about last week. All right, the first one is UNH, okay, United Health Group, and it's been doing very very well. Okay, now it's hit the $80 mark. Although it's slowed down a little, but at the $80 mark, I think my profits has been pretty good, and I'm actually looking for an excuse to get out of the trade lah. So for those who are seeing this video for the first time, my entry price was actually around here, with a stop below here. So yeah, so I made about I think 5 to 6% already on this trade. I think close to about a month, and it's been very good profits for me. So I'm looking for excuse to take off this trade, but we will see we will see how it goes because UNH tends to be very defensive in this period of time, and I like the price movement. But yeah, I'm looking for excuse, but so far no excuse to take off the position as of yet. Okay, so you want to write your positions as far as you can, and this is very important in trading. Okay, so let's move on. So you may find that I'm repeating quite a lot of things in my past videos also, as in like how you should trade and etc. And it may seem a little bit repetitive, but this is the way trading should be. It should be not too complicated. All right, you do not need to have many variables in order to make a very good trade okay, because humans are like that. When you have more information, right? Let's say you have 40 pieces of information, you may feel like you have an edge, but studies have shown like no matter what you do, there's always a few key major things that you should look at, and anything more would just reduce the accuracy of your picks We are not like computers, you see. Computers, the more things you feed to them, probably they can come up with a pretty good result or prediction But for humans, is a little bit different You don't take in more information, and then you get better kind of results especially in trading itself. Okay, so yeah, the other one I talk about is USB, which is also doing very very well. US Bangkok entry price was here. It was 40.56 with a stop at 39.72. So I didn't expect such a huge move All right, but I'll definitely take it Okay, so I have one remaining position right here, and I'll try to ride it using a weekly bar. Okay, trail stop Alright, so my stop is actually at break even right now, and with such a small stop loss and such a big gain, if I never peel off my position, this will be I think close to 3.5 times my risk. But because I tend to peel off my position as it goes up, because I want to reduce my risk I don't want my trade to become a loser, so I usually peel off some trades. All right, peel off some position as the stock goes up to reduce my risk. All right, so USB, which I talk about, is also very very good, doing very well now. And we have Tesla. Okay, last week I talked about Tesla being a very small trade. All right, and you can see it has pulled back already, so it has hit my break-even stop loss. All right, so my entry was can't remember where already but I have taken I think within 3 days I've taken about 2 positions, and then the last position I stop out at break-even. Okay, I'm changing my charting to this one instead of the profit charts, because profit charts has been kind of wonky lately, like in terms of the price. That means the data is a little bit weird, so I'm changing to this for the time being. So bear with me while I shift to this. And the next one is FOSL. Okay, I talked about FOSL last week, and I didn't get this. Stock because the pullback has not been sufficient enough, and there wasn't any big strength, short-term momentum turn in any of this area. So no trade for me for FOSL. Okay, so another one is American Express. Okay, American Express, I talked about it being showing very strong resilience in accordance to the market, and my entry was actually at quite high, which is at 92.58. So usually for stocks that did not pull back to my Fibonacci levels and I'm trading based on momentum, right? Those stocks I'll usually reduce my position size because it can be a little bit more risky lah. Okay, and in this case, even though it's a good trade, I did not put on a very big size in this American Express trade, but nevertheless, it's still a good trade. So my entry was at 92.59 with a stop below at 91.17 and 2 positions off on this bar. Okay, I managed to get off 2 positions on this bar, and then I'm riding my remaining position. Remaining position here, and my stop loss is at break even. Okay, and I also talk about Walmart. Okay, Walmart is very, very good stock, and Warren Buffett has it. So Walmart in itself, right? There was no pullback, big pullback with strength on the pullback. So I did not get into this position, so no entry for this. Okay, but I'm actively looking at this stock because I think this is a very good stock. And if you really want to trade this, maybe you can take a short-term Fibonacci pullback. All right, maybe around 75, 79. But I tend to like to see a little bit of strength before I enter lah. Okay, so if you have entered previously Walmart on my trade, you'll be entering around somewhere here. Okay, around the 61.8 retracement. Alright, I don't buy on strike of 61.8%. It depends on other criteria or factors for me to enter the position. Okay, so there are basically 2 ways for me to enter position. One is to hit the strike but with supporting evidence on the left side of the chart. The other one is to actually buy on a momentum upturn. Alright, so I want to see some upturn first on a 30-minute chart or even less before I enter a position. So it is a different entry criteria and it depends how you feel the market is doing now, because sometimes the market has very bad news, all right, and it keeps selling down and selling down and selling down, something like this. Okay, it keeps selling down and selling down. So you wouldn't want to catch a falling knife unless you are very confident that the stock may have a tendency to turn. But sometimes the news of the market is very bad. It tends to blow through all these levels. So you need to understand what situation you are in and which entry criteria which entry method you are more comfortable with when entering a position. And just do what you feel that is suitable for you, because I think a lot of people who teach courses and they teach you, but then it seems that it doesn't suit you, and that's where you have trouble. All right, it can be a legitimately very good method to trade, but because it doesn't suit you, right? Maybe the strategy has 60% hit rate, which is actually very, very good, but because it doesn't suit you, you tend to do the wrong things when trading the method, and that's where you get burned. Maybe you instead of 60%, you get about 30 to 40% hit rate because it doesn't suit you. So like I tell my students, right? Every one of us is different. Some of you may like long distance running. For me, I hate it. Okay, I prefer to play soccer or run short bursts and sprints. So everybody is a little bit different, and we are all made a little bit differently. So you need to find the setups, right, and the methods and entry methods that actually resonates with yourself, right? Because at the end of the day, no matter what strategy you use, if you cannot follow it, then it's pretty pointless, right? Yeah, so that's what the point I'm trying to make. Okay, so this week I don't see any much opportunities. Like I said during last week, I'm finding very hard. I find it very difficult to find trading opportunities. Like for this week, the 2 stocks I'm flagging out is actually General Electric, which I already had a position when I was here. Okay, so you just see my past videos, my entry was actually right here. Okay, I got somewhere near the low of this because it's the 786, all right, plus the trend line. That's where I enter with a stop below 23.35, all right, and I'm riding this position. Now you can see G is a very slow stock, but a very stable stock. So it's been chopping around in many days really, but I'm still riding one more remaining position with my stop at break even on this. So this has been very good profit for me. So this week I'm seeing that it has been showing a lot of strength in accordance to the market, but because I already have one remaining position with my entry criteria here, there's no need for me to go and enter this trade again. All right, another one is Citigroup. I think Citigroup has been showing very good strength. Okay, and probably I'll wait for a pullback. Alright, maybe I don't know. We have to see whether when does the stock turn, but I think somewhere around this area is somewhere around this area is a very strong support zone. Okay, you can see the stock has been bouncing off these areas, and once it pulls back around here, maybe, and I see a short-term momentum turn, I may be inclined to enter with a very tight stop on Citigroup. Okay, so I think that's all for today. The Singapore market also has been showing a little bit of strength, but just be careful okay, when trading stocks at this period, because like I said, it's the May to October period, and doesn't mean that May to June nothing happened. Doesn't mean that bad things cannot happen the next few months okay, and there are a lot of market corrections, especially around September or October. I mean, it happens a lot, sometimes even in August. So you wouldn't know. All right, just if you're trading, just be aware of this period and try to trade a little bit less. All right, make a little bit money here and there, and protect yourself. Remember, capital preservation is number one, especially in trading. When you're not comfortable, you need to scale back a little. Okay, of course you don't have to listen to me. You can just trade whichever you feel is right for you. It's just my 2 cents on the market, and whether it takes any weight or not, it's up to you to decide. Okay, so I will be having a course probably on late June to early July. So if you're interested, just go to sharesage.com. All right, sharesage.com is here, and you can just subscribe to my newsletter, where I will post emails to you maybe once a week or once every 2 weeks, very little only okay, which will show you whether I have posted a new video, or if I have any good articles that I want to share. Then you can just put in your name and email here, okay. And if you're interested in the course, just go to the program section, and you can get the full curriculum details here and the brochure here, all right, and some testimonials. And once you're interested in the course, please get in touch. Go to the contact page and put in your name, email address, and your message, and I will get back to you on this. Okay, so I think that's all. Most important is to trade safe and keep your capital preserved. All right, thank you.